What is the trigger point when they should say, hey, like I need to make sure I'm handling sales tax properly?
We typically find that the most compliance forward companies are dealing with this as soon as they cross a revenue threshold, because it's easy to just start tracking your nexus and exposure. And then it becomes very important for CEOs, CFOs, strategic operational advisors like Levy, as you start to think about those big events, for your company that could really drive impact down the road. So some of the reasons that we see folks, look to, deal with sales tax is around ongoing upcoming financings, M&A, the risk of audit, and really just flagging that, these are things where, every bit of sales tax that you're not paying today becomes a liability on your books down the road. And so, if you have a company that is selling for, 11 million EBITDA, but you have a, $500,000 sales tax liability, that's going to come right out of your, acquisition multiple. And so it's important to deal with upfront.
You're selling your software in, X state, let's call it New York or something to make it an easy state. You're selling your software in New York. You're not collecting sales tax. You will owe that in the future, but because you've not collected it from your customers, it's going to come out of your own cash reserves, basically.
If you've triggered a sales tax obligation because you've crossed nexus, so in the state of New York, I believe it's in a couple $100,000. In other states, it's a certain number of transactions. Every transaction from that point onwards, you will have to pay it whether you collected it from the customer or not, and that will become a liability on your books.
But what are the key elements that help you figure out when you actually need to start doing those collections and how much you should be collecting, right? Like, because sales tax is different in every state, every jurisdiction is different. So how much you actually charge your customers for your product is also different. But, when should you start? So long way of saying it, should I start doing those collections immediately the moment you start selling in a state and just say, look, we're going to add 6% sales tax to every sale we make just to be safe? Or how should a company be thinking about once again when to start, and then how to figure out when they actually really need to owe that money to a state?
Well, the good news is you don't necessarily have to pay for Anrok to just start. You could integrate with QuickBooks and you start monitoring. So, we offer, through partners like Levy, you can integrate with the Anrok software, and you can just track your exposure at no cost. So you can just get that monitoring and see how you're, working towards those thresholds. So that's a big thing. But yeah, in general, I think if you want to take an even, quicker way, you say, well, what states am I operating in? If your entire business is in California and you're selling software, and you're selling one product, I think you just watch, when did we move out of state? When did we hire someone out of California? But if you're a multi-product business, you have a little bit of SaaS, a little bit of professional services, maybe some digital goods, multiple employees in different states like Texas, New York, Washington, then you probably a lot earlier on, want to be running the integration and seeing, how are we exposed?